The Fed just called an emergency meeting for Monday. And I realize that some people get pissed off when there's some kind of extreme title or extreme thumbnail, but this is very true. Don't be a thumbnail reader or a thumbnail viewer. Actually listen to this, because there was an emergency meeting called. Now, crypto and the stock market are not freaking out at this yet, but it will be interesting to see what happens. I want to talk about that. I want to talk about what's happening in the crypto market, some news, some biases, some gambling, and I will get to all that. If you guys don't mind hitting the subscribe button and hit that bell notification so you know right when I post a video, I appreciate that. Also, there will be timestamps underneath the video, but I would highly suggest watching through all the way to the end because there's a lot of important information. Thank you guys, and let's get into it. So the crypto market pretty much sideways over the last day. We had a dump after the CPI data came out, then we had a pump, and then we had more of a dump, and then we've kind of come back a little bit since then. So this is all normal for cryptocurrency. If you're new, a couple $1,000 move in a day or two isn't anything crazy. So right now we're sitting around $44,000 Bitcoin right below it. Now, the Fed just announced this emergency meeting. This is happening on Monday, February 14, and they are going to review and determine there's going to be review and determination by the Board of Governors of the advance and discount rates to be charged by the Federal Reserve banks. So there's some back and forth about what this actually means. This was not planned, and if you remember, we had something similar to this right when COVID hit, and we had the Fed call an emergency meeting on a Sunday, and they lowered rates significantly overnight. So some people are saying that this is going to be them raising rates because they can't wait till March and they need to curb inflation. Other people are saying, no, that would cause fear in the market, that would cause panic, and they just talked just a few weeks ago about not raising rates right now. So they don't really want to provide uncertainty. We want to actually believe in what they say. So there's a little bit back and forth right now. So the question is, what happens Monday? We'll have to wait and see. Now, let me be clear. A lot of different websites are saying that this is an emergency meeting, but I am not going out and selling all my crypto. They do this sometimes where they add extra meetings. And whether we raise rates next month or this month or 2 months from now, crypto is still the way to go for a majority of my portfolio in my mind. I hope I make that clear enough. I still think that there's so much potential. There's only going to be 21 million Bitcoin. There are 3 times that number of millionaires. This is immutable. It can't be changed. The US dollar can be inflated all the time. No one can take this away from you if you have it in the right places. You can get extra yield on it. You can borrow from it. There's mass adoption. There are so many reasons to like Bitcoin and other cryptocurrencies that I'm not worried about this Fed meeting. I don't care what happens. This is going to be an asset for the next 5 or 10 years. And there is one way that I'm going to talk about a little bit later that you can get out of it and get in it a little bit easier without taxes, which we'll talk about. But I am in this for the long term, for the majority of my portfolio, unless we pump up to the moon really quickly. And in that case, I'll still take profits, but I'm still going to keep a majority of my Bitcoin and my Ethereum. And I still think that this is a great investment. That's just my opinion. I just want to be clear about that because I'm not trying to spread fear, uncertainty, and doubt about this Fed meeting. I couldn't care less. But it is something that you'll see in the news. It is something that institutional investors will pay attention to. That's why we're going to win in the long term, and they're going to be scratching their heads why they are underperforming crypto investors like they have for the last 10 years. We can see that the fundamentals of crypto are still really good. We have whales that are buying right now. These are entities with over 1,000 Bitcoin, and they have been accumulating pretty significantly recently. So we went from about 7.9 million Bitcoin just really recently at the beginning of the year to about 8.1 million Bitcoin by these entities. We also have the illiquid supply continuously going up. We had that price of about 69,000 Bitcoin back at the end of last year, and we didn't have anywhere close to this amount of illiquid supply. So a lot of people are just saying, hey, there is a ticking time bomb. It's just a matter of time before there's a supply shock and the price goes up exponentially. Now, this is just an interesting piece of news. Legendary rapper Drake betting 1.3 million in Bitcoin on the Super Bowl. And in solidarity of that, I want to tell you about a new sponsor of the channel. So before we go any further, I want to talk to you about a new partner of the channel. And to be clear, this is something that I don't typically do. I usually invest for the very long term in cryptocurrency, and I'm thinking years and years out. But I realize some people like technical analysis. I realize that some people just like to have a good time and want to invest and mostly risk a lot of money for short-term profits. So that's why I'm talking to you about TurboXBT. So there's a link to this underneath the video. They allow you to take short-term bets, just seconds to minutes, on what's happening in the crypto market here today. Now, they say you should never invest funds that you cannot afford to lose, which I think is totally true. But if you want to try out their demo account, you can try it out here. You can go with your buddies and try it out and see who can make the most profit. Basically, you're just guessing, is it going to go up or down over the next 5 seconds, 30 seconds, 1 minute, and you can get potential profit. So if you are right, then you can get 95% profit, or if you're wrong, they take it all. Now, that's where they make their money. So this is the account that was set up for me. I can set up a position. I can say, okay, from here, I think we're going to go up. And then over the next 1 minute, if I'm right, I get 70% of the profit. If I'm wrong, I lose all of it. So that's where their margin comes in. Highly, highly risky. And you can see right here, I am about to have a successful trade. So the 0.002 was just added. You can either deposit crypto or fiat on this. You guys can check out the link underneath the video. Of course, be very careful. This is basically gambling. So be careful and don't put in money that you can't afford to lose. So what am I doing here today? I'll tell you about this really quickly before we move into the next piece. I've actually been adding some to my GBTC holdings. Also bought some MicroStrategy. Also bought some ETH, which is basically the Ethereum version of GBTC. They're all at a discount. And the fact is, if you haven't already thought about this, when you buy spot Bitcoin or Ethereum or something like that, and you think that the value is going to go up pretty quickly, that means that you're going to have short-term capital gains, at least here in the US. It might be different in other states or other countries, but the fact is you're going to have to pay a higher amount of tax on it. So if you're playing something short-term or you do want to take profits, it might make sense to buy one of these stocks at this point and then put it in a retirement account. That's what I did. So I just wanted to bring that up. And I found something really interesting. When I was looking up MicroStrategy to look at some of their numbers, I went over to Seeking Alpha and this warning came up. MSTR is at a high risk of performing badly. So I was kind of curious what this was, and they basically said that compared to other stocks in the tech sector, it was at a terrible value. And I just found that interesting. Obviously, they're just reading the numbers. It's some kind of automated process, and they don't take into account that it is a proxy for Bitcoin. So just pay attention to that. It's kind of interesting. But let's move on to the next point. These crypto Super Bowl ads feel more like pets.com all over again. So this article is coming from wired.com, and they're talking about how this is very similar to the .com bubble. So they say that this warning comes not because crypto companies are looking to turn stockings into mascots, but because they are currently pumping millions of dollars into buying up ad space during the Super Bowl. It's interesting because every single ad takes millions of dollars. I don't know what the average ad is anymore, but I remember when I was a kid, it was around $1 million, then it went up to 2 or 3 or 5 or something like that. So every company is pouring millions of dollars if they're buying an ad in the Super Bowl. They say that the message seems to be that crypto is hot and everyone should get on board. Now, I think it's very clear that not everyone is built for crypto. There's too much volatility, but the fact is it is hot, right? There are multiple cryptos that have gone up 10x or 100x in the last year, and there's going to be more of a boom in the future. But it's not for everyone, and not every crypto is hot, just like the stock market isn't always hot. They say all the market's early adopters are already in the game, so these ads could be what lures in the crypto curious. These companies are desperately scrambling to bring in new customers. Whenever we have a new investment product, there are early adopters, and before it can get mainstream, there have to be early adopters. You don't see them talking about the stock market in the same way, right? You don't hear about people buying real estate and not being an early adopter. And they say that the companies are scrambling to bring in new customers. Now, anyone that's trying to put ads in the Super Bowl is obviously trying to get new customers. That's the whole point of advertising. You don't put ads anywhere just to be a good person. You put them in to try to gain new clients. Now, I think that's a little bit misleading too, because of the fact that this is implying that they have to scramble to get new customers. Fidelity is buying crypto-related products. They're offering it to institutional investors. Do you think they're scamming institutional investors out of their money by offering these products to them? No. KPMG just bought Bitcoin and Ethereum. They're not doing this to try to have some marketing ploy to get new clients or anything like that. This is putting their name to it. So they would only do this if they really thought about it and believed in it. So they're not trying to make a marketing employee. They think that that's a better use of their money than keeping it in cash, at least for whatever percentage they put in, and that makes sense. CPI data came in at 7.5%. So I wish some of these ads could talk about how much the Fed has screwed them over the last year, how much the US government has screwed them, but it's probably a little bit too close to the Super Bowl to take that into account. But there's more of an obvious use case for something like Bitcoin than ever when we have this high inflation. Also, these companies are already growing, so they don't have to scramble to get new clients. FTX just reported a 512% increase in average daily volume in Q3, and Voyager grew 20x in new funded accounts over the last year. So these companies are doing just fine with or without the Super Bowl. But it is one of the most watched events on TV throughout the year. So it makes sense that if they're trying to spend a lot of money because they have a lot of money, because they're so successful, it makes sense to put it here. They say whether any of this works will entirely depend on how much people outside the tech world want cryptocurrencies. So there are people outside the tech world right now that are already buying crypto. I just found this article interesting. It seems very biased, but I can understand why some people think that this is a bubble. But comparing it to the dot-com crash, I think is different because these are real companies bringing in real profits. They have real clients. They have a real use case, but they are not the same as some of these other companies. And a lot of people still don't see that. They think that's all fugazi. They think that's all fake. But, I would say that whenever there are people that think that, that means that you are still earlier on than them, and that still means that there's more potential, right? If you go up to someone and ask them about Apple stock, they'll say, great company, but that means that there's probably not as much upside if everyone's on the same page. So let me know your thoughts about all this underneath in the comment section, and I'll see you in the next video.